Trent Bradshaw with Bradshaw Financial Planning, and thank you for joining us for Mind Your Money. Wanted to bring you a market update prior to doing the reallocations for next week. I know it's been on the news of late.
Even the New York Fed's model, which is incredibly simplistic, it just uses the shape of the yield curve, it has recession probabilities in the next 12 months about the same as the probabilities that preceded each of the three recessions of significance since 1985.
So one of the key pieces of data that suggests that is the 2-year bond has obviously inverted the 10-year bond at times throughout the last couple of weeks. Normally that's a predictor that we're going to see a recession potentially within the next 12 to 18 months, which really runs up right to the election in 2020. So what about other data? Does other data show the same potential for that recession coming down the line? Well, if we look at wages right now are going up as corporate profits are coming down. And if you look at this chart that's up on the screen, almost every single time that we've hit the historical averages, and you'll see it circled, we have had a recession in regards to the U.S. economy. So this is a second piece of data that suggests that the probability could be there for that to occur. Well, let's look at earnings. Hopefully earnings will be the catalyst to keep the economy growing at a pretty good pace. But what we see going into the fourth quarter of this year for the Q3 earnings of 2019 is actually a deceleration in earnings of negative 3.8%. If that occurs, this will be the first time that we've had 3 consecutive quarters of slowing corporate earnings since Q4 of 2015 through Q2 of 2016. Well, how did the market perform during that time? Does that necessarily mean that the market's going to go down? Well, take a look at this chart. The next chart you've got is actually the S&P 500 performance from Q1 starting on January 1st, 2016 through 9/30 of 2016. And what you'll see is actually the S&P 500 appreciated right at 6%. So even though you have decelerating earnings, the market looks out into the future for expectations. So it doesn't necessarily mean the market's going to go down, but it definitely keeps us on our toes. We will be back within the week to give you an update on what our reallocations look like and what our thoughts are going into the fourth quarter. But I want to take this time to say thank you for joining us. If you have any questions, join us on social media, shoot us an email or give us a call. This is Trent Bradshaw with Bradshaw Financial Planning, and Mind Your Money. Have a wonderful week.